In their eyes, low interest rates, high inflation is good because it helps grow the economy faster. If the dollar crashes, that's a big problem. Don't ask for a raise next year or this year.
There has been some craziness right now. Michael Burry has basically said that the Fed is lying about inflation.
Yeah.
Bill Ackman has been giving out some pretty serious warnings about inflation and has said that the Fed needs to step up interest rates right now. What is going on?
Yeah, we've been talking about this a lot on our YouTube channel, partially because it's becoming a bigger and bigger deal as time goes on.
Right.
In a video that I recently recorded, I kind of went through a time lapse of inflation in 2021. In the early part of 2021, towards March, April, that's when inflation started to become a thing that people were really talking about. Obviously, we were talking about it in 2020 as soon as the money printer started. We started talking about inflation and what could potentially happen. And then we started to see the effects of it in 2021. And so when we started to see the effects, that's when people started to talk about it. In March, April of 2021, we saw inflation at its highest levels since around 2008. So that's when you started to hear a little bit of talk about inflation. Hey, the prices of things are going up. And then right after that talk started happening, that's the first time the Fed came out and they started really emphasizing this whole idea of inflation is transitory. So this is like early 2021. Fed is saying inflation is transitory. Don't worry about it. It should cool down by the end of the year, 2021. Then came the middle part of 2021, and the Fed almost said, I told you so. Because in the middle part, June, July of 2021, that's when inflation started to cool down. It was still high relative to previous year's inflation, but it was less than where it was in the early part of 2021 temporarily. So the Fed said, see, inflation's transitory. It's cooling down. By the end of 2021, inflation will be all better. And that's when President Joe Biden also came out and got on the side of the Fed, said the Fed should keep doing whatever they need to do. It's working. It's getting the economy running. Inflation is under control. Nothing to worry about. Then in August of 2021, inflation started to pick back up a little bit and the economy didn't grow as fast as we would have liked. And then in September, that's when things started to get bad. In September 2021, inflation started to now really ramp back up again. The economy was not growing as fast. We saw one of the worst economic reports in September. Jobs were not coming back, but inflation was growing significantly faster than before. So now in September, we were having higher inflation than we saw in the early parts of the year. So now we're getting close to breaking records in September. Then came October of 2021, and now inflation just breaks all sorts of records. By October of 2021, inflation is at its 30-year high. And so now people are, that's when the real alarm bell started hitting in October. Like October was when every media outlet was like, holy cow, this inflation thing is real. Like something's going on here. Then came November. And obviously the Fed started to get a little nervous because everybody was like, holy crap, what's going on with inflation? What is inflation? People started to get really worried because we saw massive amounts of inflation around that time. November, the Fed came out, had their meeting, and obviously they don't want people to worry about inflation. So they came out and they said, inflation is transitory again. It was really funny because like this was when like November was when the media outlets started to like kind of make fun of the Fed, kind of call BS, because they started saying the Fed keeps singing the same transitory bells. They keep like before in the early part of the year, anytime you heard the media talk about inflation and the Fed saying it's transitory, they would always say the same thing. The Fed said it's transitory, nothing to worry about. And then you'd have these like lone people that would come out and say, Michael Burry would come out and say that the Fed is lying about inflation, and then whatever. So it was kind of like these like little outliers that said, hey, this inflation might be worse than we think. We expected, or the Fed rather, expected that inflation would be gone by the end of 2021. Then came the end of 2021 and inflation is not gone, rather it is much higher than expected. So what happens? Well, then in the end of 2021, November, the Fed came out and they said, yes, we understand inflation right now is a little bit higher than what we expected, but it will be gone by 2022. So it went from being gone in the middle part of 2021 to being gone at the end of 2021 to now being gone in the mid of 2022. Now let's see what happens. But this is where you have more and more people popping up saying, hey, this inflation is actually a real concern. Like, this is something we gotta start thinking about. And everybody that I've interviewed on our channel has had similar sentiment. I brought on Peter Schiff, the Economist. He talked about how, yeah, inflation is a real concern. He's really worried about inflation. He says it's going to get significantly worse in 2022. That's why he's been moving a big portion of his portfolio into gold. He hates Bitcoin. He hates that whole side of things, cryptocurrency. Mm-hmm. So he's been moving a lot of money to gold because if the value of the dollar crashes, well, that makes commodities like gold go up. We talked to Robert Kiyosaki. Robert Kiyosaki has a very not a good outlook on our economy. He says we're going into a depression. He says this whole dollar is going to collapse. I talked to Michael Saylor and Raoul Paul, both very big in the cryptocurrency space. Michael Saylor, the CEO and founder of MicroStrategy. Sure. He was the guy that bought 114,000 Bitcoins in 2020. He spent $3 billion buying Bitcoins. And for these crypto guys, same thing. So we have different fields of space. Crypto, non-crypto, general money. The Bitcoin guys are saying the same thing, that, hey, the economy is recovering, but their worry is the dollar, because we are creating inflation. And so that now you go into what Michael Burry said. Michael Burry says the Fed is lying. The reason why he says the Fed is lying is because when the Fed is trying to increase inflation, well, why does the Fed want to increase inflation? Because in the Fed's opinion, the way that you grow the economy faster is by creating more inflation. Because if we can keep interest rates low, if we can keep printing money, then corporations will have more dollars to reinvest back into their companies. Cheap dollars, they'll be able to borrow money very cheaply. And if they can borrow money cheaply, they can open up a new manufacturing plant. They can open up a new restaurant. They can open up a new store. They'll be able to hire more people. They'll be able to invest in their growth. So as long as corporations and people can keep borrowing money cheaply, this will grow the economy. And includes people, because if interest rates are low, you're more likely to go out and buy a home. If more people are buying homes, well then, what does that mean? Well, now real estate agents have business, mortgage companies have business, title companies have business. All these companies continue to have more business, right? So it fuels the economy. Contractors keep going to work. So in their eyes, low interest rates, high inflation is good because it helps grow the economy faster. And then they also want to create inflation because the government has $29 trillion or so of debt, national debt, and the only way they can pay that back is if they create inflation, because now they can pay back this national debt cheaper. So now, why is this a concern? Well, let's go through the scenarios, because I don't know what's going to happen. I can't predict the future, but there's a few different things that can happen. And based off of that, you want to make your decisions with your money smartly. So the first answer is the Fed is right. The Fed is right, meaning inflation is transitory come 2022, or let's just say 2023. All inflation goes away. Prices go back down for everything. Wages go up. Prices go down. The economy is booming. If that's the situation, well, you really have nothing to worry about. You can keep your money in the bank. Maybe you lose a little bit of value between 2021 and 2022, maybe 2023. But big deal, the price of things will drop, so you would be benefited by just saving your money. So in this case, no matter what you do, you'll come out a winner. So if the Federal Reserve Bank is right, we don't see inflation, we see inflation go back down, no problem. Option number 2 is, what if the Fed is kind of wrong? So we do continue to see inflation, but we see just moderate inflation. We see a little bit high, but kind of moderate, nothing out of the ordinary. So what about that? Well, if that's the case, then your savings will continue to lose value. Asset prices will continue to go up. And we could talk about the economic side in just a bit, but you have the issue of now people's wealth getting hurt. It's harder for the average person to go out and invest, because if you see inflation, well, now your dollar is less, so you're earning this money from your job. These earnings don't stretch as far. You save money, it doesn't stretch as far, can't buy you as much. And now when you want to go and buy stocks, or you want to buy real estate, or you want to buy cryptocurrency or gold or whatever it is, all these assets are more expensive, not because they're necessarily more valuable, but just because the value of the dollars you want to use to buy them don't stretch as far. It's not as powerful. And then you have option 3, where the Fed is really wrong. And this is where things get scary. If that happens, I don't know if that's going to happen. And I also don't know the likelihood, because we've seen money printing happen for decades now, and so far we've been okay, but I'm going to address that in just a second. But if the Fed is really wrong, well, now we have real concerns on our hand. If the Fed is really wrong, what does that mean? That means essentially that the dollar crashes. If the dollar crashes, that's a big problem. Because, yeah, we have a strong economy, but that means other countries around the world don't really care about the dollar. People are dumping the dollar, the value of the dollar goes down, and now you start to see really high inflation. Maybe not hyperinflation, but really high inflation. If you start to see really high inflation, well, now a few things are going to happen. The Fed would have to now start actively fighting inflation. How do you actively fight inflation? By doing the opposite of what causes inflation. If inflation is by increasing the monetary supply, the way you fight inflation would be decrease the monetary supply. So how would the Fed do that? Well, they would have to raise interest rates. In the 1970s, just look at history to see how it's done. I don't like to predict the future, but I can tell you what happened before. In the 70s, we saw very high inflation. We had a lot of spending in the 60s, war spending, and then in 1971, the U.S. took the dollar off of the gold standard, actually. And that's when we really started creating more and more inflation. So we saw a period of very high inflation in the 70s. We saw periods of very low economic growth. It was called stagflation in the 70s. Well, that was when, in the 70s, the dollar started losing a lot of value, and people were worried about the value of the dollar essentially crashing. And so what happened was, in the 80s, the Fed raised interest rates. They ramped up interest rates. And so in 1982, if you wanted to go and get a mortgage, you weren't paying 3%, 4%, 5% a year on your mortgage. You were paying 18.5% a year on your mortgage.
Wow.
And that's what they had to do in order to decrease the monetary supply. So if we start to see really high inflation, well, now that means that the Fed would have to actively start fighting inflation. If they start actively fighting inflation, that means you would see interest rates really rise. If they start actively fighting inflation, you'd see much more people worried about inflation, because right now the Fed still says that you shouldn't worry about inflation. They don't want to create panic. They don't want to create fear. So they're actively saying, don't worry about inflation. But if they start worrying about it, everybody else will. So they would have to raise interest rates, and then people would get worried about inflation. Because if the Fed came out and said, holy cow, inflation is a problem, what do you think is going to happen? Everybody is going to say, crap, I need to take my dollars and go buy gold. I got to take my dollars and go buy Bitcoin. I got to take my dollars and go buy something else. And so you would see just a lot of panic. You would see certain asset prices, like, gold is your big inflationary hedge. Bitcoin is now becoming something like that as well. But gold is your traditional inflationary hedge. You would see a lot of cash go there. You could see stock prices crash. You could see real estate prices crash, because if interest rates just doubled, right? You go from 3 something to 6 something, you're going to see a change in real estate prices, because your mortgage payments are going to be so much more. Right now, the only reason why people can afford these high home prices is because they're subsidized with low mortgage rates. But now what people are realizing is it's becoming harder for them to afford these higher home prices, because they're having to borrow so many dollars. And so, yeah, even though mortgage rates are lower, the amount of dollars they're having to borrow is so much, where now it's back to it's getting very expensive to buy a home. And so now if your interest rates starts go up a lot, well, now that's going to cause a big change in the housing market. So that's option 1, option 2, option 3. Option 1, best case scenario, is the Fed's right, no big deal. Option 3 is the Fed's really wrong, big deal. So that's the kind of the situation that we're in. That's why Michael Burry has been signaling alarms. He's worried about it. Bill Ackman is worried about it. You have a lot of people that are worried about it. But what I think you need to be worried about inflation, but not be scared of it. You have to understand it, but you have to understand how to protect yourself and just really kind of know what's going on about it.
So the Fed is basically the problem here. If they just stopped printing money, there'd be no inflation.
Yeah, and it really doesn't.
Why don't they just do that?
Well, why is there a central bank? I mean, we can go to the philosophy of a central bank, or you can read the book The Creature from Jekyll Island and understand what created the central bank. I mean, a central bank, the Fed is not a part of the United States government. It wasn't created by the founding fathers. They did not want to create a central bank, but it was created. Now, the interesting thing about the Federal Reserve Bank is, for one, it's called the Federal Reserve Bank, yet it's not a bank. They don't allow you and I to go and make transactions there. It's not a bank. It's not a reserve. They don't keep reserves anywhere. They don't have like a vault of reserves. They print. And then they're not federal. And everyone's going to say, how can you say it's not federal? Just go onto their website. It explicitly states on the Federal Reserve Bank website that they are not a federal entity. They're not a part of the federal government. They're their own entity. So the Federal Reserve Bank was created as a way to monitor and regulate the monetary supply in the United States. The way that they do that is by printing. So when the United States goes into a deficit, they want to spend more money than they bring in. The Fed can then help the government by turning on the money printer and giving the government a loan or giving the government money. And then they also monitor the monetary supply through interest rates. So when the economy is overheating, you have a lot of inflation, they can raise interest rates to cool down the economy. And if the economy is hurting, the economy is slowing, well, that's when they cut interest rates, right? That's what we saw happen in 2020 when the pandemic hit. Interest rates were cut. That's what we saw happen in 2008 when the real estate crash happened. Interest rates were cut. That's what we saw happen in the 2001 crash when the dot-com bubble burst. Interest rates were cut. Now, the interesting thing about all of these things that I just mentioned is before each one of them, you had a very reoccurring narrative from the Fed. Before the year 2000, the chairman of the Federal Reserve Bank was a guy by the name of Alan Greenspan. And people were worried about a potential stock market bubble. That was when the whole dot-com bubble was brewing. And yet some people worried about it. But the Fed chairman, Alan Greenspan, came out time and time again, and he said that there is no stock market bubble. There is no dot-com bubble. There's nothing you have to worry about here. And so, people were angry that what the Fed was doing was continuing to inflate this bubble, and then ultimately in the year 2000 to the year 2002, the dot-com bubble burst. The NASDAQ lost nearly 80% of its value over those 2 years. Then before the year 2008, Alan Greenspan was the chairman of the Federal Reserve Bank. And before the year 2008, he came out time and time again saying, first, there is no real estate bubble. There's nothing you have to worry about. Then as people got a little bit more worried, he said, there are some signs of potential real estate bubbles in some pockets of the country, but it is very contained. There's no possible way that it could bring down the real estate market. Then the real estate bubble burst, and the entire financial market almost came crumbling down. Our real estate market lost 80 to 95% of its value in some areas. Now you have the Federal Reserve Bank, Jerome Powell, the now chairman, saying inflation is transitory. Inflation is not a problem. Inflation will go away. We don't have to worry about inflation. This is why some people, Bill Ackman, Michael Berry, the people that we've interviewed, are concerned. It's because of the track record of the Federal Reserve Bank. Now again, if the Fed is right, that's good. That's good for the economy. It's good for people. And if you take action to protect yourself against inflation because you're worried about it, you buy some gold, you buy some inflationary hedges, maybe you buy some crypto, you buy some, hard assets. What's wrong? Well, hey, you protected yourself against inflation. Inflation doesn't happen. You're okay. All you did was make smart decisions with your money. So if the best case scenario happens and you take action today to protect yourself and to protect your wealth, and you were wrong, but the Fed is right, well, you come out winning because all you did was make smart decisions with your money. Hey, you own some extra gold. Hey, maybe you own some real estate. Hey, maybe you own some Bitcoin. So you own some emerging market stocks. You own the right assets, and you just bought some extra assets instead of buying a car, instead of buying some clothes, instead of going on a vacation. So, hey, great. You're still financially winning. No big deal. But if the Fed is wrong and you don't take action, well, now you're screwed. Because now, if inflation continues and you don't do anything, well, then you're the one paying the price because the Fed just screwed you over. They said, don't worry about inflation. You listened, you didn't do anything, and then inflation happened, and then your cash in your bank just got eroded away because of inflation. So that is the concern, is what if the Fed is wrong and people don't know? Right? It's in the Fed's best interest to make sure people don't panic, because if people started panicking, well, that's never good. No government wants to see people panic. No entity wants to see people panic because it would create unrest. It would crash the markets. The Fed doesn't want to see crash in the market. That's the last thing they want to see. They don't want to see any market crash. Even like we talk about the taper tantrum. I've talked about this before. This concept is so funny. It was coined after the 2008 crash, because after the 2008 crash, the Federal Reserve Bank started creating these stimulus programs where they would buy back bad assets. They would buy back bonds. They would buy back other assets to keep investors confident, to keep them investing their money in the stock market. Well, after the 2008 crash, the market kind of got addicted to the Fed's money printing. Like it was kind of like you were addicted to a drug. They did not want that to stop. The Fed couldn't stop the money printing because the investors needed it. It was like, it's a high. They couldn't live without the money printing. Well, then a little while later, a few years later, the economy really started stabilizing. Things started going back to normal. And the Fed pulled the plug. And they said, we're no longer going to continue with these asset purchases. Well, as soon as they said that, the stock market had a mini crash. It was labeled the taper tantrum because these investors had a tantrum. They sold, investors had a tantrum. And this was like really bad news for the Fed because they don't want to see a market crash. They don't want to see investors lose money. And so then came the 2020 pandemic. Same thing, except amplified. The Fed is now buying more of these assets. They're buying more bonds. They're buying more mortgage-backed securities. They're buying more of these things. They're just funneling money into the market. At first, it was unlimited quantitative easing. Then they tapered it down to $120 billion a month. And then you started seeing these really high inflation reports. You started seeing how bad inflation was. And then the Fed finally came out and said, you know what, we're gonna chill out with some of this inflation, this tapering. We're gonna chill out with some of this bond buying. And so then they tapered it down, and they said that they're gonna stop doing that. But the reason why they took so long to start this tapering of their asset purchases was because they were worried about a taper tantrum happening again. They were worried about the stock market crashing. They were worried about seeing the stock market go down. And so it's in their best interest to not keep people worried, because if people are worried about inflation, then you would likely see asset prices go down, because people would then sell, move to more protectionary assets rather than growth assets, and the Fed doesn't want to see that happen.
So essentially what you're saying here is the Fed either knows what they're talking about or they're lying about inflation.
Yeah, I don't know. I can't read their minds. I mean, they're supposed to be smart people. You got a bunch of smart people in the Federal Reserve Bank, but I mean, come on. Like, if you're supposedly some of the smartest people in money, and people are sounding the bells before the 2008 crash. Now, I was really young then. I was in high school before the 2008 crash. And if people are sounding the bells saying, hey, you got to worry about this, and all they keep saying is don't worry, don't worry, don't worry, at some point, they're going to realize, holy crap, this is bad. And when that happens, what do? Well, they don't want to get you to be worried, because if you got worried, well, now they look like the bad guys. So they try to just work behind the scenes to kind of fix the problem, and then the problem just keeps getting bigger and bigger and bigger until it ultimately bursts. If the Fed today looked at the inflation data and said, holy cow, this is going to get bad, this is worse, well, what are they going to do? They wouldn't come out and say, okay, everyone, inflation is a real problem, because then people would panic. It would cause unrest in the markets. It would cause unrest in the entire world, because we're not talking about a real estate crash or a .com crash, because a real estate crash is kind of contained in the United States. Now, obviously, when you go into the Wall Street, the financial market, you had other countries that were also hurt by it. But if we just say the real estate market in the United States is hurting, well, somebody in Italy is probably not going to care. Somebody in a different part of the world is not going to care as much. If they said the .com companies in the United States of America are struggling, well, somebody in another part of the world isn't really going to care. But if they came out and said that inflation is a real problem and you got to get really worried about the inflation issues in the United States, now this isn't a little issue in the United States. This is a worldwide issue, because who holds dollars? Well, obviously anybody in the United States transacts with dollars. People earn dollars. People spend dollars. They save dollars. But guess what? Countries around the world own dollars. It is the safe haven for the world. It's the dollar. And so you have countries, China, Japan. I mean, every major country in the world holds dollars. So now we talked about a real estate crash, a stock market crash. That's why a dollar crash is such a big concern. It's not just the United States. It's the whole world, because all these countries around the world are holding onto dollars. That's why it's such a big concern. And if the Fed started sounding alarms about inflation, well, that's bad news, not just for the U.S., but for the world. And, you do have agencies and countries starting to do things about inflation. You have countries in Europe that's starting to sound alarms about inflation. You had the IMF come out and say that we need to start looking at inflation as a real concern and start doing something about it. That's what Bill Ackman did. I actually read his proposal that he gave to the Federal Reserve Bank. He did a speech to the Fed, and he had this slide deck. And I went through the slide deck, and the last couple slides in the slide deck were just quotes from countries and entities telling the government and the Fed of the United States, hey, wake up, pay attention to this, do something about this, because if you don't, this could get bad. So that's the concern. If the Fed is wrong, that's the concern. If the Fed is right, no big deal. There's just a lot more that can go wrong if the Fed is wrong than, the upside if the Fed is right. If the Fed is right, things just continue like normal. For the average person, it makes no difference because they don't understand. But if the Fed is wrong, it is going to affect the world, which is why people are so worried about it, and that's why it's such a big concern.
But this is why the majority of people don't trust the federal government and the Federal Reserve, because they feel like they're holding something back. They're not telling them something.
Well, I don't know what the majority of people think. I don't think that most people are questioning them. I think most people trust the government and the Fed. I think the people that are more financially educated start to ask questions because they start to study history. They've seen these things happen before, and they're worried about what could happen. But I think most people, if the central agency says you have nothing to worry about, they'll say, I got nothing to worry about. And I think that's the concern. I think that's where we got to figure out what is really going to happen. And again, it's like, if the Fed is right, no big deal. If you take measures today, you move some of your cash to gold or Bitcoin or some of these stable coins earning interest. You do some things to protect yourself. Hey, all you did was buy assets instead of going out and buying liabilities. So if the Fed is right and you take these actions, all you did was buy assets. Okay. It's so sad. If the Fed is wrong and you don't do anything, it's like you look at your risk to reward. Mm-hmm. It's if the Fed is wrong, the risk with that, if that happens, is exponentially worse than if the Fed is right and you do something. So that's kind of the game that people are playing, and that's why it's such an important thing for. I guess that's why you have more and more people starting to speak up about it.
So why doesn't the Fed just stop printing so much money? I mean, we've had, $5 trillion over the last year and a half. Why don't they just say, that's enough money. We've got enough for the entire world, or for the entire United States.
Well,
that's enough.
It's not just printing. It's printing and interest rates. That's what Bill Ackman says, that they need to raise interest rates. And the printing is the government wants to keep printing. We have the new infrastructure bill, the new spending bills. The whole idea being, if we spend this money right now, we will be able to lower the cost of things in the future. If they're right, great. If they're wrong, again, it's a much bigger problem. And how do they fund it? Well, they're trying to raise taxes. If they can't raise enough taxes, which they probably won't, it's almost certain that they won't be able to raise enough money in taxes to cover it, because the taxes won't cover the bill as it is. And usually with these types of bills, the cost of the actual proposal will end up taking 2 to 3x, costing 2 to 3x what they actually propose. So if the raised taxes don't cover the spending as it is, and the spending costs more than what it does, well, then you have a deficit. This is why we have $29 trillion with the national debt. The way you cover the deficit is through the Fed. The Fed wants to keep the government happy. And then the Fed wants inflation because that's the only way the government can pay back their national debt. We just talked about that. You have this national debt. The government wants to pay it back with cheaper dollars because if inflation happens, the value of the dollar goes down. Now, this is where things get even more, another layer of the onion. It's like ogres, Shrek. It's like an onion here, right? So if you pull back another layer, each president gets 4 years. Every administration gets 4 years. Then you go for re-election. No administration, no president has said, I am going to create a refresh. I am going to create a crash. I'm going to let this toxic assets fail. I'm going to default on this bad debt. I'm going to just let it all go. Because the reason why booms and busts are a part of our cycle, or it's a way to refresh. It's a way to take out the crap, the bad assets, and let things start over. When the 2008 crash happened, the bad lending went away. The toxic assets went away. All those chopped up loans, the new tranches of investments that these banks created, they started getting wiped out because all these are bad investments. And so the people that were holding the bag, well, the banks that were holding them were getting hurt, and then the government eventually bailed them out. But the whole idea is, if you make bad investments, you pay the price. If you get greedy, you pay the price. And so that's where you have booms and busts. You have booms where, things go up, but then you also have the people that get greedy, they make bad investments, and then you pay the price. Things go down. It's a refresh. Same thing in the 2000 to 2001 dot-com bubble bursting. It was a refresh of bad dot-com companies. Back then, man, if you had a company, you put the word .com at the end of it, you could go and raise $5 million like it was nothing. I mean, it was like literally people were throwing money at you because if you put the word .com at the end of your company, you could just say that your company's worth millions of dollars. You were so easily able to raise millions of dollars. So then the bubble burst, and then all the crap went away. So it's a refresh, right? But no government, no administration, no president, no Federal Reserve chairman wants to be the person that says, we're going to cause things to crash. We're going to cause a refresh. We're going to let this happen. No, each one wants to kick it down the road. They want to keep passing along that way the next person is holding the bag. And so that's the issue. I mean, it's how do you solve that? Well, what do you think would happen if the Fed chairman came out, Jerome Powell, and he says, all right, inflation's, a concern, not a major concern. It's not too late. But what we're going to do is be proactive. We have a lot of bad assets out there. We have too much cheap debt. We're going to ramp up interest rates. We're going to cut down our spending. We're going to cut down our money printing. We're going to decrease the monetary supply. We're going to make savers winners. We're going to let people, the average American person, win because now your earnings are going to be worth more because we're going to burn dollars. We're going to burn some of this excess cash. We're going to let the American people win. Well, what's going to happen? The stock market's going to tank. The real estate market's going to tank. Every institution is going to be angry. Every single bank is going to be angry. Every corporation that trades on Wall Street is going to be angry because their market cap is going to be cut in half. You're going to have all this anger. They don't want to do that.
That's the wealthy, though. That's the wealthy part of America versus the majority of America who's just trying to get by and make a paycheck.
For the average person, inflation is not good. deflation would be better for the average person because now your savings are worth more. Your check can buy you more. And when you save your money in the bank account, your savings become more valuable over time because it's deflationary. But that's not what we see. We're in an inflationary economy, right? We have an inflationary currency where if you make $10,000 a month right now, $10,000 a month right now has less buying power and value than $10,000 a month 10 years ago did. Your savings are being inflated away, meaning your your savings are losing value. Your $10,000 in the bank today can't buy you what $10,000 could 20 years ago.
Why is that?
Inflation. I mean, everything we just talked about. You increase the monetary supply, the value of your dollar goes down. So, and your banks aren't paying you any interest. So for the average person, they would benefit from deflation. Now, if you're financially educated, inflation is what you need. Now, okay, but I should premise this. I got to give a little caveat there because that deflationary benefit is good for a little bit. Because deflation has, again, it's an onion. At its face, it's good for the consumer. Because at first, hey, your $1,000 in the bank can buy you a little bit more than what it could before. But then what happens after that? Well, now, if you have a mortgage on your home, each mortgage payment is going to feel a little bit more expensive because now the dollars that you're using to pay back your mortgage are getting more and more valuable. So now your debt becomes more expensive. Your credit card payment becomes more expensive. And if you work a job, well, now your corporation, if they trade on the stock market, the market cap goes down, so they may not be able to borrow as much money. They might not be able to sell as much equity, so they might have less access to cash. If they have debt as a corporation, now their debt becomes more expensive, and so it becomes harder for these corporations to grow. And so you would see the economy slow down, which could in turn mean higher unemployment, and that could mean that you lose your job. So in the short term, this deflation would be good for the consumer, because now your savings become more valuable, your earnings become more valuable. But if deflation continues, now you would see much higher unemployment, people will lose their jobs, your debt becomes more expensive, and all those issues. Inflation, likewise, who does inflation benefit? It benefits the people who understand it. It benefits the financially educated. It benefits the wealthy. And the good news is you don't have to be a multimillionaire to benefit from inflation. You just have to be financially educated. And this is where that financial education is so important, because for the average person, if you make $1,000, that $1,000, you put it in your bank account, is going to lose value every month, every year, because of inflation. Because most people are not investing. We did a video on this not too long ago, where right around half of the American population has no investments at all. No 401k, no IRA, no real estate investments, no stock market investments, no nothing. They have zero money invested. The other half of America has some money invested somewhere. But for the majority of this now, 50% of the population that's investing, the majority of them only have money in a 401k or an IRA. The majority of them have no other outside investments. They don't have their own stocks. They don't have their own ETFs. They don't have their own real estate. They don't have any gold. They don't have any cryptocurrency. Nothing. All they have is a 401k or IRA. So this is where, again, financial education is so important, because as soon as you start understanding what is inflation, you would start to probably do something about it, because you're going to say, wow, this is a big deal. I need to do something with my money. I need to turn my money into something tangible, something that is deflationary. That way I can actually save money, build wealth. I can actually invest my money. So that's the difference between a deflationary asset and an inflationary asset. This is why a lot of people have been moving to things like Bitcoin. Without getting too deep into the Bitcoin talk, obviously we talk about gold. Gold is a good inflationary hedge. I own physical gold. I also own Bitcoin. Bitcoin, a deflationary asset where you have 21 million Bitcoin. So you have a limited supply of Bitcoin, which can't change. But you have more and more buyers coming into the Bitcoin market. So people are buying Bitcoin as a property. So as more people buy Bitcoin, what's going to happen to the price of Bitcoin? Well, if you cannot increase the supply, the price of it has to go up, right? Supply and demand. So that's where it becomes a deflationary asset, because if you save Bitcoin and your Bitcoin is sitting there and more people start buying it, well, then the value of your savings are now becoming more valuable because more people want it. And so, this is where, again, you have to understand, before you go and buy any Bitcoin, you got to understand what it is, see if it's something that you believe in, see if this is something that you agree with. And so, just watch the video that I did with Michael Saylor. I mean, we went so deep into Bitcoin and why he believes Bitcoin is going to be the future of savings and value. But you can also couple that with Peter Schiff. I mean, Peter Schiff hates Bitcoin. He thinks Bitcoin is going to zero. For him, it's all gold. So, I mean, you can watch both and see what you think is right. I mean, I don't know which one's right. I own Bitcoin. I also own gold. You know what I mean? I can't predict the future. I don't like trying to be in the business of predicting the future. I don't like speculating. But, I can do things with my money to protect myself. I think that there's a lot of applications for Bitcoin and crypto in the future. But, if I'm wrong, I don't want to be the one holding the bag.
Right.
So that's where, it's you just got to be financially educated and make the smart decisions with your money.
As far as inflation goes with companies, now, do you think companies are really that financially responsible? Do they have that much financial responsibility to their employees? So let me give you an example.
Yeah.
Over this last year, we saw the airline industry almost go under because nobody was getting on flights anymore. However, we found out that these airline industries were giving their executives billion-dollar bonuses with all of their money. Now, my point is, if we don't print money, if we don't give them more money, well, then maybe they'll start using their money a bit more responsibly. These companies have billions of dollars in money just sitting around. Why do we need even more money circulating in order for the economy to grow? They've got money. They're just not using it right.
Yeah, it's crap. It's horrible. You should let them fail. Some of these companies need to fail. And it's painful because there's this concept of moral hazard. Moral hazard meaning I do something wrong. I should pay the price. You bail me out. Oh, I did something wrong. I didn't pay the price. I can do it even worse now. And this was a big talk in 2008, moral hazard, because the banks that were too big to fail now were bailed out through a big check by the United States government. Well, where does the government get their checks? The government gets their checks through taxpayers. If the taxpayers don't pay them enough, they get their money through money printing. And if they print the money, then who bears the burden of that cost? The average American. So big banks are now being bailed out by regular people. And what are these big banks going to say? Wait, you're just telling me that I made billions and billions of dollars of bad loans. I made a big mistake. And now we're thriving and we can give up multi-million-dollar bonuses to our CEOs? That's pretty crappy.
Yeah.
And the person who pays the price is the average person. Now, a lot of these banks paid the money back, but to what extent? What type of market do we want to live? And now you look at the airlines. So the airlines are slightly different. I will give it that, than what we saw happen after the 2008 crash. Because the 2008 crash, it was lending practices by banks where they encouraged risky lending. They created new lending programs which went under. The airline industry did some bad things, but their bad things weren't really, I would say, at the level of what the banks did in 2008. What did the airlines do? Well, before 2020, airlines took their cash and they bought back stock. So they took a lot of their excess cash, they bought back shares of their stock, causing the stock prices to go up. And then came the pandemic, and then people were not flying on airlines, and then they had no money, and then the airlines were on the verge of bankruptcy. So the airlines were not allowed to operate, not because of something that they did. They were not allowed to operate because governments said that you're not allowed to fly. And then the pandemic and all that. So the airlines were forced not to do business by governments around the world. And so they were not allowed to operate, which makes it, okay, should they have had more cash on hand? Yes.
They had no emergency funds.
They had no, it was just absolutely nuts that these airlines within 2 weeks were out of cash. But then, okay, 2 weeks go by, whatever. But then, the shutdowns went on for a year. It's very hard for most companies to survive with a year without, even 50% of their cash flow. If you are losing billions of dollars, it doesn't really matter how big you are. At some point, you're gonna fail. And so for the airlines, it was that they were being really just turned off by governments around the world. Now, should they get a bailout? Oh man, I mean, should anyone get a bailout? That's a tough question. I don't know. But the airlines were a different story than the banks were in 2008. So bailouts are different. I don't really like the sound of money printing anyway, because the person that pays the price is the average person. But then what's the alternative? You kind of like comparing two evils. If the airlines don't get the bailout, then you have tens of thousands of jobs that get eliminated. And now you have the American people paying the price, people that don't longer have jobs. Now here's where things get interesting, is if they did lose their jobs, what does that mean? Well, for most of those people, it really wouldn't mean much, because you weren't working as it is, and yet you were still getting paid by the government, right? So like the airlines laid people off. It wouldn't have made a difference if you quit or not, because your money was coming in from the government. So it's like you can't answer that question in a vacuum, like without understanding all the other aspects, because it doesn't matter. The government's paying the company and they're paying the people. So it creates inflation both ways. And who is the government and the Fed out to protect? Is it the corporations or is it the people? And then people will say it needs to be the people. Corporations will say it needs to be the corporation. But what you don't understand is that corporations are made up of people. So it's, you have to kind of figure out where it is that you want to be. But at the end of the day, you're right. If you get a bailout and you're using any of this bailout money, I know nobody likes to use the word bailout because that's not politically correct anymore, but that is what it was. It wasn't a stimulus. It was a bailout for the airlines. If they get a bailout, they should not be allowed to use that money to buy back their own stock. They should not be using that money for executive bonuses. They should not be using that money to do any of that. They should be using that money to regrow, rebuild, reinvest back into the company, grow the company bigger, stronger, so they can pay the money back plus interest back to the American people.
We've talked a lot about one side of this inflation issue, the Federal Reserve and a lot of this money printing. But the other side is kind of all of this supply chain issues right now.
Yeah.
What is that going to be solved next year? I mean, is the Fed taking that into account as well, or
the supply chain issues, I assume, would be solved by the end of 2020, maybe the mid 2020, depending on how fast the government, the economy, countries around the world can get their stuff in order. The supply chain issues should be solved in 2022. Will it? I don't know, but it should be. Now, once the supply chain issues get solved, what does that mean? Companies will be able to source products. Corporations will be able to source materials. They will be able to produce whatever they want to make, and then they will be able to sell it easier. Will it cause the price of things to go down? Potentially. Yeah, I think, supply chain issues can cause the price of things to go up. And then corporations would make the price of their products go down if they feel like these higher prices are going to hurt their sales. Just think about this. If you're at the board meeting for your company and I sell mugs, and before the pandemic, I sold mugs for $2 a piece. Then came this pandemic, and then I was able to sell these mugs for $5 a piece because my costs went up a little bit or a lot a bit, whatever. I was selling these now for $5 a piece, and people are still buying them. And now I get my products easier, I get them cheaper. Now I have this meeting. Okay, so we're selling this mug for $5 a piece. should we bring it back to $2 a piece? Well, if your data says that people can continue to pay, what is your incentive to now cut the price of your mug back to $2? Unless there's a reason for them to do that, they're not going to do that. Now, there could be a number of reasons. There could be a whole bunch of supply. Other companies say, oh my God, we have so much product, we need to sell them because people aren't buying them as much. So then they start cutting the prices. That could be one reason. A second reason is you see so much inflation across the board that people are struggling to make ends meet, that they can't afford buying $5 mugs. So now we'll cut the price. So there's a number of reasons of why I would want to cut the price of my product back down to normal. But again, it's going to come down to, is it worthwhile for the company to bring the prices back down?
What about just morals? Why wouldn't they just, if they know that they can charge more, why would they, if they know that they could get that product down to a lower price so people could pay less, why would they still continue to raise the price? Isn't that wrong?
Don't ask for a raise next year or this year. Actually, tell your boss, you know what, sorry for the raise you gave me last year, take it back. Morally, why do you need a raise? Tell your landlord, I'll pay you more money next year. Why not?
I think that these companies, they make enough money to support themselves.
You make enough money. You made enough money 5 years ago to support yourself. Why do you want to raise?
But we're talking about billions of dollars here, not
does that
an
make a
average
difference?
person's salary.
No, how does that make a difference?
It makes the difference because these companies are intentionally, if you can make something.
A company's job is to make money. Their job is to make money.
But an egregious amount. If you're saying they can make something.
A company's job is to make as much money as possible. It doesn't matter if it's egregious or not. That is a company's job. A bank's job is to lend money. A person's job needs to be how can they protect themselves. If I paid you or anyone, if I paid anyone $10 million to do a job, would you say, oh, I have enough money, I don't want to do anything ever again? Some people are going to say, let me reinvest this. Let me do more. Let me build something bigger. Let me do something else. This is a debate of, is enough enough? For some people, sure. For other people, no. But it's not our duty to decide what's enough for somebody else. It's your duty. Now, a company's job is to make money. I should not have to sell my mug for $5 or $2 or whatever it is based off of a profit margin. If it costs me 25 cents, I should not be told you can only sell it for 4 times your cost. I should not be told that I have to sell it for $1. I should be able to sell it for whatever price I want. Now, this is where things get interesting. Because if it costs me 25 cents to make this mug and I sell it for $10, what's going to happen? You're going to look at that and say, holy cow, Just Breathe or whoever is ripping people off. Let me go enter this market. Now, you're going to create a mug, 25 cents, because it's not that hard to create a mug, and you're going to sell it for 8. Someone else is going to sell it for 5. And then that's going to bring the prices down because of competition. So that's where competition comes into play. There's a difference between like what should you do and what do you do, right? Should you morally, I have my own morals. I could have taken tens of thousands of dollars for free in 2020. The government was giving me free money. They said, hey, there's a pandemic. Here, take a free PPP loan. Money you don't have to pay us back. Tens of thousands of dollars. I was paying money out of my pocket for rent, for a whole bunch of other things. I didn't take it. Why? Morally, to me, I don't want to take it. Because me, personally, I don't believe in that. I think that's crap. I know where that money's coming from. I know what that's going to cause. I know it's going to cause inflation. So I'm not going to take that money because I think that's a disservice to the American economy. Now, do I like what some companies do? Absolutely not. But that's where I want to see competition come in and take over the companies that are mistreating people and mistreating their employees. That's what I want to see happen. I don't want to say the government needs to tell you what to do. I don't want to say it's not allowed. I mean, if you're doing crappy work, what's going to happen? Well, another entrepreneur is going to come in. They're going to be smarter. They're going to treat people better. They're going to treat their employees better. They're going to treat their customers better. And they're going to come in and they're going to make you pay the price. That's what I want to see. I want to see competition come in, and I want to see the people decide. It's not a matter of morals. Let a company do what they want. If they start screwing people over, someone else is going to say, this is an opportunity for me.
I love that.
That's what entrepreneurs do.
I think we need better companies.
That's what entrepreneurs do.
Yeah.
And that's why we need more entrepreneurs. We need entrepreneurs because an entrepreneur's job is to solve problems. And you find a problem in an entrepreneur will then come in and solve it, which is why we need more creativity. We need more innovation.
I love it.
And with that, I think it's time.
It's time.
It's time for the guac round. This is where I answer your questions. Now, I'm just a random guy on YouTube. I'm not a financial advisor. I'm just a random person here on YouTube giving you my opinions. If you want my opinion, which is just my opinion, nothing else, leave me a question. I'll put the link to the voicemail in the description below. When you call in, leave me your name, tell me where you're calling in from, and then give me your personal question, and I will try to answer it on the guac round, on our guac talk. And Nathan, what's our first question?
Today's first question comes from Javon.
What's up, Jaspreet? This is Javon from Jersey City.
What's up, Javon? How you doing?
And here's my question. My dad has $187,000 in net worth.
Okay.
$109,000 of that is his 401k, and then the rest of it is just Roth IRA and other savings and other individual investments. He is 62. He's behind for retirement. What can he do to get on track to potentially have a comfortable retirement? He currently makes about $37,000 a year, and with overtime, it's about $42,000.
Sure.
Lives in Brooklyn, New York. Let me know.
Thank you. Okay, so your father has around $200,000 in these retirement accounts, trying to figure out how he can retire. Well, the first thing you got to understand, if he has any one of these accounts, he's going to have some sort of advisor that he can talk to. The concern is, if your money is in a 401k, IRA, and it's not in bonds, the way that these investments typically work is during the younger years of your career, you're going to be more aggressively invested in things like stocks. Towards the last decade of your working career, you're going to move your money from stocks into other things, safer assets, cash, bonds. The reason being, if you see a stock market crash, you want to make sure you have time to recover. So if your dad is 62, he really needs to first take a look at what he can do to protect some of his money, because the last thing that he wants to see happen is getting close to retirement. His money is still invested in a way where all of his money is in these aggressive funds, and then something happens, he sees the value get cut in half, and now he can't retire. So he's got to find a way to protect that money. And now if he wants to be able to live in retirement, he needs to know how much money he needs in retirement. And then he's got to figure out how he can create income. So that might be taking some of this cash, buying a rental property, or buying some sort of business that he can potentially operate part-time in retirement, because if that's not enough money, it sounds like it's not going to be enough money, he's going to have to continue working. Unless you or some of his kids support him, he's going to need some sort of supplemental income. So that might mean investing in some sort of business where he has to keep working, even if it's part-time, or investing into some rental properties that are passive that will pay him with some cash flow. But again, you got to weigh the passive versus active. How much money does he need? And kind of go with it from there.
Next up, we have a question from Jennifer.
Hello, my name is Jennifer Shen. I live in Vegas.
Hi, Jennifer. How you doing?
I own a rental property which flows pretty good cash flow.
Nice.
At this point, my cash flow is way greater than all the expenses and depreciation. So I left with positive cash flows where I'm obligated to pay much higher taxes this year. If you can share with me your thoughts on how to save the taxes on positive cash flows flowing from the rental properties, I would greatly appreciate it. Thank you.
Awesome. So you have a rental property, it's paying you rental income. You take this rental income, you pay all of your expenses, you still have some money left over. And then you take your depreciation deduction, which is a paper deduction. So if I make $5,000 a year in profit from a rental income, this is the money in my bank account. I'm not going to pay taxes on all $5,000, because in real estate, you get to deduct the value or a depreciation deduction against that on your taxes, which might leave you with, let's just say, $2,000 in taxable income, even though you have $5,000 in your bank account. So your question is now, how do I take this $2,000 worth of taxable income and reduce that even more? Well, the way that you would reduce your taxable income is you would have to have more deductions in order to do that. So how do you get these deductions? Well, this could potentially mean taking on more debt and buying another property with it, which would do that, or making a renovation in your property, buying some expenses. Now, you got to understand with some of these expenses for your property, they're not all going to be deducted 100% this year. Some of them are going to depreciate it over a number of years. So You want to find something that will help appreciate the value of your property, that can help increase your rental income, where now this expense will then be able to deduct some of your income today. And you can also take a look at some specific tax loopholes. I know one was the truck tax loophole, which says that if you own a business and you buy a heavy vehicle for your business, like a truck, then you will be able to deduct the entire value of the vehicle in a short amount of time in your taxes, whether it's 1 year or a few years. Talk to your accountant because they're going to have the specific rules. But there are specific loopholes out there like that you could potentially use if these expenses are used in your business.
Next question is from Donna.
Hello, Jaspreet. I'm Donna Lindley. I'm in Oklahoma.
Hi, Donna. How you doing?
And my question is, I have 8 rental properties,
Nice.
all paid for except for 3, and they're fixing to pay off within the next year.
Great.
And I just thought it'd be cool if you did a video on people that do have rentals already, and then like the best way to move forward in the economy, if you think it's just your opinion. Thank you.
Well, congratulations on investing in real estate. I'm glad you have these rental properties. You know, I invest in real estate. I think real estate is a great tool to generate cash flow. You know, so even if you see inflation, even if you see an economic slowdown, you know, it is something that people will always need. People will always need a roof over their heads. People will always need a place to sleep. So that's the reason why I love real estate. And, you know, so I continue with real estate. Although prices are high, I continue looking for deals, but you have to look for deals that you believe are a good value. So don't overpay. And if prices go down, that's an opportunity for you to come in and buy more. So, you know, am I a fan of real estate? Absolutely.
Next caller is Ronald.
Hi, my name is Ronald, here from Queens, New York.
Hi, Ronald. How you doing?
My question is, if someone steals some money from you and you steal it back, is it considered stealing?
Wow, we're getting
Good question.
philosophical today.
Yeah. Yes, that is stealing. 100%. This goes back to what we were talking about with morals. If you want my opinion, yes, it's stealing. Someone steals from me, they steal from me. That's bad for them. If I steal it back from you, that's bad for me. That's stealing on my part. I don't like that. So if you're asking for my moral opinion, yeah, that's stealing. What do you think about that?
Yeah, I would have to agree.
Yeah, so good question. And with that, that concludes another Guac Talk. This is Nathan. If you enjoy Nate, want to see more of Nate, you have to check out his Minority Mindset News channel. He publishes videos every single day on the top finance and business news. So make sure you check out Minority Mindset News. This is Guaci. I am Jaspreet Singh, and that's another episode of Guac Talk.
The problem the Fed has is that if it admits that inflation is here to stay, well, then it has to do something about it. But it can't do anything about it, because if it does, the economy will crash, right? The stock market will crash, the bond market, the real estate market, and the government will be forced to slash spending.